Hello, I just wanted to jump on and do an email to explain all the panic behind interest rates for you and give it some context and some broader understanding. So, number one, the Bank of England base rate has gone up by 0.5% today, and now the Bank of England base rate is sitting at 5%. And what we have then on top of that is mortgage lenders, and a mortgage lender's rate is usually based and calculated on the cost of money. They buy the money in most cases. They buy the money in on the money market, and then they add their profit to it. So if, for example, they're buying it at 5%, they might decide that they want to lend it out with a 1% profit or a 2% profit. And so that is how the mortgage rates are different to the Bank of England base rate. So that's the first thing. So with the Bank of England base rate going up, we can expect most mortgage lenders to put their mortgages up because they want to make a profit. Now, how much profit they are prepared to make or how little profit they are prepared to make will depend on what they think the risk of lending is. So if you are someone who doesn't have a good credit rating or has missed payments in some way, or maybe your wages are not quite high enough to actually cover the cost of the mortgage and all of the other expenses we expect to pay on a monthly basis, you might find that a lender will charge you a higher interest rate because they perceive you as a risk. So that's generally about mortgage rates. But what has happened is that most people will go into a mortgage rate that is 2 years or 5 years. 10 years ago, we used to do 2-year and 3-year deals, and now we tend to do 2 years or 5 years. So here we are in 2023. If you came out of the COVID period and you bought a property in sort of 21, you would be now coming out of your fixed term 2-year mortgage. If you bought your property in 2018, 2019, you will be coming out this year or next year. And the way that your mortgage offer will have been written is that they will have said to you, your mortgage rate is this amount of money for 2 years or 5 years. And so that is a fixed rate mortgage, fixed for that period in time. And then what it will say in your mortgage offer at the tail end of this is that there is a variable rate. So when this offer ends, you will move on to the variable rate, the standard rate, if you like. And what they did was they will have put a calculation there for you to then be able to see what that rate will be. And what it will have been based on is base rate plus a margin, a profit margin, if you like. So what it might say is base plus 2 or base plus 3.3 or base point 2.7, something like that. So there'll be that number. If you can go back to your mortgage, you will be able to see when your current mortgage term comes to an end, and you will be able to see what that variable rate is. Now, for some people, that rate might have been base plus 4. And so if you are now facing a base rate of 5%, and then you've got this standard variable on the top of 4%, you're going to come out from maybe a mortgage that was fixed at 2 or 3% for 2 or 5 years, whatever it was back in the day there. And now you're going to jump out onto something that is maybe 9%. So this is the current level of your current borrowing. This is where the standard variable is going to take you. If you do nothing, when this period ends, you will be forced to pay that amount of money. That's it. And you probably can't afford to pay that amount of money because it easily could be double or triple what you were paying. Right. So you have a choice. You can remortgage. Now, most remortgages have to take place at the end of a fixed period because the bank will have made a commitment to somebody else, another money lender, that they are going to take that money for a 2-year period, and then they're going to lend it to you. And that other person doesn't want the money back. So they're not going to want the money back off of you. So you're going to be stuck in that. And we'll just talk about 2-year deals for now. You're going to be stuck in that 2-year deal. When that 2-year deal is up, you will automatically get switched to the much higher rate. But what you can do prior to the end of your mortgage ending is get in touch with either the mortgage lender, if you went direct to the mortgage lender, so if, for example, you were in a building society or a bank and you went straight to them, if you went straight to them to arrange your mortgage, you can go back to them. Or if you worked with a broker, your broker should already be getting in touch with you. But if you've lost contact with them or whatever, get in touch with a broker to do you a new mortgage calculation. And what you're going to find is that you were here at 2 or 3%. You might come out at 8 or 9%. And what they might be able to do is find you a deal in the middle that is probably going to cost you in the region of 6%. But 6% is better than 8 or 9%. That's what you need to understand. You need to understand when your mortgage ends, what will the new rate be for you? And what does that rate mean in terms of monthly costs? And then your job, and it's possibly easier if you've gone direct to the lender, is to negotiate. Now, this is just my idea. I don't know whether any of the lenders will take it. But there is a challenge here, right? Because at this new, let's call it 6% rate, and you were on 3%, you're going to pay double, roughly speaking, right? You don't want to pay triple at 9%. But what if you can't afford to pay double your current mortgage? So you're paying 2 months mortgage every month from now on going forward, and you're going to be stuck in that for a 2-year period. And you can't afford that. So negotiate with your lender now to see if there is some way that you can change your borrowing so that this is affordable. Now, as a property investor, I never buy a mortgage or buy a property using a capital and repayment mortgage, which is typically what most homeowners do. They have an interest portion where they're paying back the interest, and they have a capital portion, which is where they're bringing down the cost of the debt. And in the first part of your mortgage period, you're paying more interest and less capital. And the smaller your debt gets, you're paying much more capital off and very much less interest, right? Now, what if you could just ask your lender if you could just pay the interest only? I don't know if they will say yes to this. This may be lender by lender. It may be case by case. But if you don't ask, you're definitely not going to get. So my thought to you is, whatever position you're in now, get your paperwork out, find the facts, find out when your mortgage ends, find out what you might roll on to. Go to either the lender or the broker and ask what your current position is. If you go out into the market, what mortgage could you get right now? And then work out whether you can afford it. Now, there's all sorts of other things you can do in terms of getting out your spreadsheet, doing your maths, looking at what you can cap back on. And that's all good advice anyway, right? And if you don't have a spreadsheet, if you want to drop me an email at vicky@wushay-associates.co.uk, or if you see this on Facebook or wherever you see this video, just get in touch with me and drop me an email, and I can send you a copy of the spreadsheet. Okay, so that's one thing you could do, is manage your expenses so that you could potentially absorb this cost. If you're already at the point where you're fully tight on your budget, then you need to look at ways that you can mortgage. Now, one of the other options that's open to you, now this is going to be a little bit harder if you're a family with children, but have you got a spare bedroom? If you've got a spare bedroom, is this the time to consider taking a lodger? You can take a lodger into your property, and that income could help you pay down some of this difference in the top of the mortgage cost. That could be an option for you, but you'll need to think about your family circumstances there. There was a woman on the television this morning who was talking about how her husband died a couple of years ago, and she's been cutting back anyway because the income into her family is a lot less. And now her mortgage is going to go from something like 300 to, I don't know if it was 12 or 1800. I can't remember the numbers. But that she's talking about, I was paying this on my mortgage, and that is the standard variable I'm going to. She's not talking about the fact that she could get a remortgage in the middle. Now, maybe because she's older, and if you're older or you've got parents that have still got mortgages on their property, or older relatives that have still got mortgages on their property, then actually getting a remortgage might be a challenge for them. So you can work together as a family to see if you can make a difference to this. But now's the time to pay attention to your finances always. And then let me just have a word, if you're still here and you're actually a landlord, right? And my plea to you as a landlord is, look at your figures now. You should be doing this anyway. You should have been aware of the fact that your mortgage was up. I have a mortgage that is up at the 1st of August, and I have secured my rate at 3.99 way back in April. So I've already had that negotiation, and I know that that is an offer that is still there for me. So I've already done it in advance. Don't wait till the last minute. Look at what the situation is and do what you can do now. And if your costs do go up, don't automatically pass this on to your tenant. And the reason I would say this is because you might put the rent up by, say, £50. Let's just say £50 for the sake of a number. That is a lot of money to your tenant, but that is just £50 a month to you. If your tenant is paying, say, £600 and you're going to take it up to 650, you can only put up the rent once in a year. You can only put the rent up by a maximum of 8% in a year. If you do that to your tenant, they may not be able to afford it. You could be in a situation where they fall into arrears. Then you've got to look for eviction costs. You could find that they decide to move out and find somewhere cheaper. You've then got an empty house. If you've got an empty house, you've got some refurbishment costs, you've got the gaps, you've got to pay for a new tenant find, you've got to go through all of those costs all over again. And it's going to take you a long while to make up the missing £600 of that missing rent in the middle, as an example. So think twice about whether you could just absorb the £50 rather than pass it on, because a tenant in a property is worth better than a load of tenants that may be in a bush, but you've got to pay for a whole load of refurbs and everything else on top, and all the fees of the tenant fine fee and everything else. So just now, if never before, look at your finances. I've got a spreadsheet if you want to have a copy of the spreadsheet, but check your mortgage offer, understand your position. Panic will get you nowhere. Stress will get you nowhere. Stress is your body telling you to do something. Get the paperwork out, look at what's going on, speak to your financial advisors, speak to your bank, speak to your building society. And if you need to, drop me a line. I'll do what I can to help. I'll give you some advice if I can. I'm not a financial advisor, but I would be happy to help you if I can. I wish you all the very best in what are going to be some challenging times ahead. Thank you very much for listening. My name is Vicky Wauchet, and I run a podcast called A Wealthy Life. If you would like to check out A Wealthy Life on Spotify or Apple, please do leave a review and rate me. I would be very grateful. Thank you very much. Take care.